today's session is a rookie guide, as I describe it, a rookie guide to profit, margin, market analysis, and more. So what it is intended for, I'm just going to chuck it on slideshow. This is to feel more confident in knowing your numbers and how to understand some of the measures that come underway. So it's not going to be a full in-depth diving into every single thing, because when I started to go through this, I realized just how much there actually is, and that can be, didn't want it to be too overwhelming, but giving a starting point so that if there are things that you go, hey, I'd like to understand that a bit more, then we can go in and answer any questions. So just before we get started, this is me. So just so everyone knows, this is me. I have a business called Pitchfork. I help small businesses who are trying to make it in retail and FMCG. Retail rookies, like my little passion project on the side. It's just a freebie. I'm really enthusiastic about FMCG, in case you can't tell, so I spend my Fridays. And I'm here to share and teach, so I can answer any questions. And if I don't know the answer, then I will find out and get back to you. So today we're going to focus on 3 different buckets, and the purpose of this is to say, sometimes when you're starting out, you think, oh my goodness, I don't have any data, I don't know what's going on at all. But actually there's a whole lot of different sets of data that you can have and you can use. And what they are is 3 things. 1, you have your internal data. This is your results, excuse me. And this can be anything from pricing, trade spend, margin, DIFOT. DIFOT means delivered in full on time. So your service level. So there's a whole lot of information that's really important that you can understand and that you need to be on top of before you start to go out to others, and also understanding your performance. The next one, I'm just going to make sure this is on this recording. Yep. The next one is your retailer data. So this is your retailer sales and shopper data, the likes of share, distribution, market growth, shopper metrics. So I'll touch on some of these things, what they are, some things you should look at. The third bucket is your market data. So this could be looking at market trends. There can be things like brand awareness, key messages, etc. in there. And then the key is working out how to pull all of that together into some insights and analysis. So all of these things to various degrees can be used for category reviews. If you're looking for investment and you want to get a pitch deck, you're wanting to launch and understand how big a market is, and doing your own performance reviews. So it's the kind of thing you might go through with your accountant as well. Please ask questions as we go through. So this is the focus. So first of all is internal data. This is your performance. So this is where we look at things like, so when you look at your sales, don't just look at your volume sales, don't just look at your dollar sales. You need to understand the mix of both. Volume is around operational efficiency and how much things maybe you want to order and quantities you want to look at. And then you have value, which is the actual money that goes in the tin. You also, and I'll go into these in a bit more detail, understanding your discounts and your retailer spend. So these are a huge portion of spend. This is, I can't underestimate, and we'll dive into this one a bit more, how much this can impact your performance. Understanding your gross margin. So this is the money you make before you start spending on the likes of marketing, advertising, sales teams, etc. Your fixed cost and operation, so how much it costs to run your business even if you sell nothing. And then finally your net profit. So that's how much money you have in the bank, and ideally it's positive. This is what you can use for your cash flow and what you'll be paying tax on. I'm not an accountant, by the way. Please go and talk to your accountant. Put that caveat out there. This is not about being an accountant. What the key thing here is, this data is free, or you should be able to get all of it from your accountant, and can be a huge help if you look at it both regularly and properly. So don't just ask your accountant for what's my GST return, because I'll tell you that, or just look at your P&L once a year and see how much money you have to pay tax on. There, it's not something you should ignore. There's a whole lot of richness of information in there that you should be using and you can use. So this can be your daily, weekly, monthly sales patterns. So who orders what and when? So do you have customers, do most of your customers order on the first day of the month? Do they order on the last day of the month? Do they order every 4 weeks, every 6 weeks, every 2 months, every week? So that helps with you from an operational perspective in your stock. How much stock do I need to have when? You never want to out of stock a customer because that's a lost sale. Also looking at your quantities. So is my product seasonal? How much do they order over time? And your mix of products. So it's a way to understand what people want, what they don't want. So you should look at it in detail. It's a must-do part of business, and it's a really key tool. So you can talk about the patterns of this when you go to retailers. You can say, hey, we know that we've got customers that come back every 2 weeks. We know that these are our top selling SKUs. We know that this is the one that people, they will buy it regardless of price. We know that we've got really high loyalty. So really think and understand this, and I'll touch on it a bit more, what you can actually get from your own data. So when it comes to looking at data and when it comes to looking at your margin model, these are the big buckets that we look at when we talk margin model. So this is where we work from the top down. I've got a 70 line, probably, detailed P&L that goes through way more. So keeping it really high level. So the first measure you want to look at is volume. And you need to understand what your unit of measure is. Because you've got to talk the same thing. Are you talking an each? Are you talking a case? Are you talking metric, like kilos? Because a kilo of drink, so if I look at, I have products here. So if I'm talking about ones, sorry everybody, you see me standing. If I talk about one, if I sold one, did I sell one? Or did I sell one? So I need to understand one of these things is not the same as the other. So when it comes to volume, be really clear when you're looking at volume, what is the volume you're looking at, and make it consistent, because you don't want to be talking different numbers. 4 of these, 1 of these. Don't think you sold 100 and you sold 100 of these and you sold 100 of these. Think about things like a conversion factor. So is there anything else you need in there so you can make things even? Make sure you're consistent so you can compare. And from a profit impact, what you can do to make more money is you can sell more. So when it comes to the likes of capacity, this is where it's a big driver, especially if you're manufacturing in-house. So you really want to understand volume first, and understand and talk the same language of volume that your retailer or that your accountant or that your manufacturing is thinking of. When I've had situations where someone says, okay, well, they make a 25 kilo batch, and I'm like, that's cool. How big are each of your units? And it's like, oh, I think maybe they're 50 grams. And it's like, okay, well, so how many units do we get from a batch? What's the wastage looking like? So volume, first thing you need to do is make sure you get your volume unit clear. Revenue, this is your list price times your volume. It's the headline revenue before you take off any discounts. And the big thing here is about setting your list price is really, really key. Because it's not too high or too low. You don't want it to be so cheap that discounting off it. If somebody wants a 40% discount, you're going to be discounting off a really low number. But again, you also don't want it too high, so then it looks like your discounts are just absolutely huge. Trade spend, this is a language I use, and people call it different things. What it means is all the discounts, all the extras that you give to retailers. It's the difference between what your headline list price is and what you invoice them, basically. There's lots more in it, but that's a fundamental. That's actually the biggest impact on your P&L other than your cost of goods. So you might be able to drop your cost of goods by 10, 20, 30 cents, but you may end up trading all of that away in discounts and margin and more without actually realizing it. So really look at trade spend and look at cost of goods. And remember, your cost of goods, so this is your discounts, your cost of goods has to be the total cost of goods. It can't be just physically the can, the liquid inside it, and the sticker. It has to be your packaging. It has to be how much does it cost to get your inbound freight. So are you paying to get it shipped somewhere? Have you got any factory overheads you need to cover? And please review your cost of goods. I say at least annually, depending on how much variation you have, the shelf life of your product, what's going on. Just really, really look at it. And I know I've had conversations with some of you about when people haven't looked at their cost of goods. And you can find yourself really stuck because you may have had big COGS increases and you haven't passed them on to retailers, and all of a sudden your profit looks terrible. And you're kind of stuck because you've had all these increases and you've not actually looked at it and said, hey, what could I do from a profit perspective to actually improve my margin? Is about buying it cheaply? Is it about making it efficiently? MOQ being minimum order quantity. You know, that's really important, is to understand what are my MOQs. Am I buying labels too frequently? And actually, if I increased it, I'd be able to get a better run, or the reverse. Don't order 20,000 labels. If that's going to take you 2 years to sell through, you're likely to have a change, because actually all of that sits as stock on your books, and that's a cost on your books. And the chances are you may end up just wasting a lot of that because I describe it as packaging has babies, and you end up having to throw it away. Stock management, also really important here. So understanding quantities of ingredients that you buy and making sure that you're not buying too much of something or too little of something, because that can impact your COGS quite significantly as well. No questions? Ask a question, raise a hand, it's an option. Your gross margin, that's your revenue, less your trade spend, less your COGS. So how much did you sell it for, less all the discounts you gave them, less how much the product is. Gross margin, always track it in both percentage and dollars. You could make an 80% margin, but if you sell 2 units, that's nothing. You could make a 2% margin, but sell 1 million units, which is called a supermarket. Either way, there's quite big differences between it. You can't bank margin percent, but neither should you ignore it altogether, because there is a reasonable margin that you need to have to cover all these costs that come underneath. This is not your profit. This is just your starting point to then cover the likes of storage and logistics. So think about, what is your storage? Are you a frozen product? Are you a chilled product? Do you have to store it on site? Do you have to store it off site? Do you want to have 3PL? Distribution costs, these can be huge. If you are direct store delivery for a retailer, it's not just your cost of goods. Sometimes people forget and they're like, oh, that'd be $7.50 a case that I have to send, and that might end up costing me an extra 50 cents a unit on this, and I didn't factor that in at all, or I charged too much, or I charged too little. So storage and logistics can be a real hit. It's not something I would generally put into cost of goods, because it's not necessarily related to the cost of the good. It's related to the cost of getting it to your customer. Some customers might charge you a percentage if you store it in their DC, which can feel high, but if you actually compare that to your time costs and shipping to send it out direct, it cannot be quite so bad. So the key here is about managing your stock efficiency. Also think about what your order quantities are in terms of sending out. Do you have a minimum? You know, sending out 2 cases isn't going to cost you that much more than sending out 1 in terms of your shipping. And you might be able to offer a discount on that to the customer. Marketing is not just advertising. There's a marketer here. There's a whole lot of marketing costs that can go in. So this is everything from your film and plates, which is related to packaging. So you have to allow for that if you're going to change your packaging. It's not just the physical cost of the box, it's the cost of the film and plates if you need it to set it all up, or the design, all the production costs of doing your photo shoots, making your posters, making your trade stands, running your advertising, all of that comes into marketing. Marketing is not just the cost of advertising at all. I tend to split that into something that's fixed and something that's variable. So things like the doing a photo shoot has a fixed cost. A variable cost can be the media. So if you're advertising online, what is your social media spend? Because you can manage that and you can control that and turn the dial up and turn the dial down. Your sales, general and admin are all the costs of running your business. They're generally fixed and you really need to have a look at that, and it can have a big impact on net profit. And then your net profit still isn't what comes in, but that's your profit before your depreciation. So these are the fundamentals you need to understand when you're looking at your margin model, and you should be able to talk to your accountant or have a look at yourself. Possibly looks a bit scary, really isn't too bad. When it comes to price, this is your biggest lever for profit. So a couple of things to remember is the retailer sets the final shelf price. If you're selling on your own website, that's fine. You can set the price whatever you like, but you can only give recommended retail price, and I'll send through some regulations. Your list price should be based on the highest price you would sell it to someone. So if somebody just rocked in off the street and wanted to buy one case, that's what your list price for wholesalers. You'll be discounting off this list price, but also remember, some retailers take a percentage of list price they may charge you, so you don't want it to be too high. And use a reasonable margin when you're doing your top line calculations. So what would be a margin that would be okay? Don't make it 5% retailer margin. Nobody's going to buy it from you at only 5%. And from tips here, the price on your website should be your recommended retail price. Don't undercut your retailers on your own website. You might be able to offer direct customers discounts through emails, through using particular codes. That is invisible pricing and promotions, but do not undercut your retailers if you're trying to sell through wholesale. They will look at it. When I was a buyer, I would look at it and say, okay, well, I expect you to have a retail price that's the same as what you're telling me. The list price is what you give, as I say, the smallest wholesaler, and list price changes and actual price changes are different. Don't think that you can increase your list price by 10% and your retail price is automatically going to go up by 10%, because it's not. They're going to be looking at a whole different lot of factors in the market that come into it. But a 10% increase in price, so if, for example, your product was $10, retail, if you can lift that 10%, that's an extra $1 that flows all the way through. If your cost of goods increased by 10% from $4 to $4.40, that's a 60-cent difference that actually can go straight through and hit your bottom line. So just because making a 10% improvement in your cost of goods might bank you 40 cents, 10% improvement in your top line price, that's $1. Excluding GST. So just in round numbers, that's the difference that you can make when it comes to price, which is why there's so much work you'll see around pricing conversations, because price is a big lever. If the cost of goods stay the same, adjusting price can be a huge impact for profit. I'm not going to go through this other than saying there are rules and you need to understand the rules, and you can't plead out of the rules. The Commerce Commission have really good guides on their website about buying and selling online. There's a Fair Pricing Act. You need to understand this. You cannot discuss pricing with your competitors. You can't agree on a price. You can't ring someone else who makes a similar product and say, hey, when we go to the store, let's all charge the same price. Just no. Nope. Just don't do it. Don't do it. Read the guides. Don't get in trouble, because the penalties can be substantial and nobody wants to be that brand or that business. If you're selling overseas, make sure you understand the different rules in different markets. So in some countries, you can have You can't set maximum pricing. So in New Zealand, I think it is, we can't set minimum price. Like prices
We
can go
sell,
higher.
we can set maximum, but not minimum.
We can set maximum, not minimum. Yeah. But really understand what's going on. There are markets, and I've had people present and they try to set a minimum price and tell me as a retailer that I couldn't go lower than. I said, you can't tell me what price I'm allowed to go out at, actually. So really understand those. Really understand those. This may be where I lean a little bit into some others here. So trade spend 101. So this is your discounts and promos, and generally your second biggest spend behind COGS. Sometimes it can be the highest. One thing I just want people to think about is your mix of types of promotions. So depth, so how deep are you going when you do a discount? Are you going from $10 to $9.50? You're going $10 to $9. So when I say depth, I mean discount from the shelf price. So that's one thing to look at. How often are you doing that? So are you doing a Briscoes wear on every single weekend? And then the type of promotion that you're doing. So is it scan, which means every time bleep, bleep, this goes through the till, you pay, you get the discount is there, or is the discount off the invoice? So things to think about is that if you give the discount off the invoice, then that's a discount off every single day, no matter how much the retailer, no matter what the shelf price is. Just a note, my understanding is that Foodstuffs are moving to net pricing. So that's a single price that covers it. So you don't pay 50 cents here and then $1 and then that reconciliation. So just checking, Sherelle, that's my net. In basic.
Yeah, so they're going to a net situation, which includes which can include a number of components. But there are certain situations where you can scan promotion as well, but not many.
Yeah, so it's just understand whoever you're selling and what that looks like. Think about the things to think about is what volume increase do you need to make the same margin dollars. So it can be really cool to drop the price and see your volume go up. That's cool. But you may actually need a substantially higher increase in volume to get the same money in the bank. Oh, whoops, it's meant to be a 10% drop in price means you need to increase your volume generally by a lot more than 10%, depending on your margin, to put the same money in the bank. So really understand what is the uplift I require. I know I've had products where they're just not sensitive to price promotions. So there's no point doing a 50% off promotion if I only sell 5% more volume, because all I've done is just given away profit. Think about how much a retailer is able to buy at discount before the sale. Can you make your promotion so that it's on scan? So beep, beep, investment buyers, when I buy it all at a cheap price and then I stick it out the back of the store and then I sell it through at normal retail and some on promotion. And think about what you're teaching shoppers about your pricing. So I describe it as the Briscoes effect. I mean, hands up, how many people go to Briscoes when it's not having a 15, 20, 30, 40, 50% off sale? Like Briscoes, they've trained us to know that we wait. Like, it is Mother's Day this weekend. I am expecting a Mother's Day sale for whatever stereotype they think I should be buying this weekend. So really think, what am I teaching people if my product is on promotion really frequently, promotion really deep, or different types of promotion? You're about to see my cat. So promotions and deals, though, if you're dealing with big retailers, they are not optional. You can't say, hey, I don't feel like doing a price promotion. You have to factor in a budget for price discounts. The brands have to provide it. Like your retailer's not going to fund a price promotion. Like, they're just not. They won't usually cut their margins, so don't expect that they'll drop their margin in half to fund a promotion. They might be. I've seen this described as, I call it, the biggest WTF area for the margin model. So really, really understand your margin model, and that's what I mean is all your discounts all the way through. Make sure you've actually factored it in, you have enough in there to cover these kinds of discounts. Understand what your minimum pricing is to break even, so know what it is, the lowest that you can go to, and really track it closely. Don't just leave it for the end of the year. Don't just hope that somehow you're going to sell enough volume to cover the costs, because you probably aren't. Let's be fair. Okay, I just need to move this cat of mine out. So some of the things, you can get creative with your price promotions depending on the types of retailers you sell in. You could say buy X cases, get one free, knowing that the retailer makes 100% margin on the free product, but it costs you just the cost of goods. So it can be a way to get new products in store. They get the whole case. There's an incentive for them to sell it. For you, it's a way to prove that customers are interested in buying it. You can do introductory deals, volume deals, special event offers, and the key is really to talk to your retailer or whoever your buyer is and understand what's negotiable, what else can you get some kind of incremental displays, because your product's your best tool to making price discounts. So you can use it as a way without the shopper seeing, hey, this product is always on special. It's like, hey, there's actually good stock weight on shelf, or there's a new product for me to try. Any questions before I've gone through a lot? I'm realizing I'm talking quickly. No? Sort of following? Deb, Sani, Sam? Helpful? Because I'm going to take a really quick break and just put my cat out. She'll annoy me. So, next is just a little quick 101 on retailer margin models. So retailers make money actually not just in the margin. Yes, they make the margin on selling the product, but they also make margin on advertising. They also I'm not saying they definitely get profit, but they can claim for additional costs like storage, payment, or merchandising, and their promotional mix and buying patterns. So off invoice, is it net price? Are they buying investment buying? Are they doing scan discounts? I certainly know when I was a retailer, I was tasked on multiple things. So I was tasked both on the average margin for the category and then also how much revenue I made from advertising, so from charging co-op for people to advertise in store. And I had to hit that number, and I would be always looking at what was the mix of products that I had in the promotion, so some retailers I might make lower margin on, but then my volume would be substantially up. So overall that would help with my dollars. Was I doing it on a multi-buy? So if you bought 2 drinks, yes, my margin was lower on the 2 drinks, but you'd still have some people buy it at the full price. So then because my buy price was lower, I made higher margin on the single purchase during the promo period. I knew what proportion of customers were buying on discount, buying the multi-buy versus buying the single. So there's a lot that goes into it as a retailer. So yes, you say I'm giving you a 30% margin, making it up. But they will be, the way that they calculate their margin is more than just that headline margin. There's lots more. And probably this is like it's very simple way of doing it. It's saying you have your retail price, there's your GST, this is their margin, your margin on baseline, then they can have their margin plus their trading terms. So they might charge discounts for settlement or storage or anything else. So got the headline margin plus a bit more. Then they've got, so again, if this is your shelf price, you've dropped your shelf price. You've got your investment buying here. So they've got the retailer margin terms, investment buying if they're buying off invoice. So then that drops your margin even more. And then if the promo price drops, the retailer margin, trading terms, promo discount, and then probably supplier margin can be squeezed. So depending on what it looks like, that retailer margin does not get smaller and your margin does not increase. So it's a picture. So target in terms of retailer, Sam, yep.
Sorry, just as a as a percentage, then how much should we be aiming to factor in terms of our costs versus what the retailer might add on? Are you like 50% or so, or more or less?
Less, and probably depends on the category. So every if you're selling into big retailers, categories will have different margins for different categories, and that can be related to how big it is, what its turn is like. There's not, unfortunately, an answer. If you're, depends on who you're selling to. So if it's a small retailer, and I'll explain margin and markup, they might want 200% margin if you're selling in like a little homeware store, for
Right.
example. And some will want that size. If you're working in a supermarket, if you go to the likes of the Foodstuffs Submerge sessions with Rachel Prenti that she runs around the country, it's Foodstuffs Submerge, she will actually give you the guidance for the different categories. So they'll give you the target margin depending on which category you want to go in. So don't have a clear answer. It's not 10%. I doubt it's even 25% anywhere.
Okay.
Saini, Sherelle, 25 to 45.
Sorry, Sam, can I just confirm, were you talking about your own margin or were you talking about retail margin?
Both, I guess, just trying to factor in as you're working at your initial costs, how much do you need to be allowing for retailer margin?
Yeah, that's a hard one. In a way, you might have to work it backwards, but I can tell you from the categories that I worked in, the margin, if we were negotiating the net costs, depending on the category, again, somewhere around 30+%, and the type of product. Janine exactly right. There's a whole heap of variables in there, but general terms for foodstuffs, you might be looking at about 30%, but I know that specialty stores could be 50 up. Oil channels could be 50 up. So it's just how you work it.
Yeah, and there's also
things who you want to work with.
Yeah,
because you're not going to sell to everybody.
Yeah.
And also, that's where your list price comes into play as well. When you price it all backwards, and you could have one list price but different terms.
Yeah, the other thing is, there's a whole lot, because then your discounts come as well. So there's the margin, and then you've got how much are you going to fund for trade spend too. Make sure you're calculating on the margin excluding GST. It sounds obvious. I've had people just make that mistake. It's retail price excluding GST. The government, that's just tax for the government. Nobody makes that. That's not a profit for anyone. Ask your retailer, as I say, what the target margin is, and know that some smaller independent retailers, cost plus is not used in probably grocery channels, but you do have those smaller retailers that, can operate on a cost plus. So what that does is they look at it, your list price that you sell to them, and then they just multiply that. They're like, our price is 2.5 times whatever your list price is. That's what the retail price is. So know that that is an approach that you might hear as well as a multiple or a cost plus. They're just doing margin and markup. They're not the same thing. Please don't confuse them. They're not the same thing. Mark up is you take the cost and you go up. So this would think, take the list price and go up. Margin is when you start at the retail price and you work down. So you've got profit on the final retail price. Again, it's all excluding GST. So retail price minus list price over retail price. So how much money there? So an example, it was $4.35 minus $2 list price over $4.35, you'd make a 54% margin, but your markup is not 54%, it's 117, because yours is retail over list divided by list price. So that's how much your list price has gone up to get to this retail price, versus this is what a retailer does. He works out margin. This is what you might look at as what your markup is, but they're not the same. And you can find yourself in a world of hurt thinking you're offering a 50% markup, which might only be 15-20% margin for the retailer, because the retailer is making the money on the price that they sell it at. So that's their price that they're selling it at. Retailer sells it at this price, you sell it to them at this price. You don't make the difference here, that's their money. So this is yours. Same situation. I'm going to send this out, but this is probably the big thing, is margin and markup are different. Really understand that and don't get confused. So in terms of the things to track and when, you should look at the likes of volume and top line sales, ideally weekly. This tells you what your momentum is looking like. So are you getting some good increases coming through? Are you starting to see that volume lift? Your trade spend and your gross margin, probably say monthly, because depending on when they come through or when invoices hit, you can have too much fluctuation. But what this will do will tell you the likes of effectiveness of your promotions. So if you've got really high trade spend and your margin's terrible, you've just discounted a whole lot of product and haven't had any volume uplift. So that's not great. You need to understand that coming through monthly. Cost of goods, have a look at it quarterly, particularly if you're the likes of a food category where you're buying new ingredients, if you're highly seasonal. Keep an eye on it, because trying to put a price increase through isn't something you should just do once a year. You should be looking at it, because there may also be opportunities for you to buy products better if you actually understand how your COGS are changing. Marketing, look at quarterly. Don't look at marketing weekly or monthly. It's not fair. Marketing takes time. This is where you understand your return on investment and your growth. And your net profit should be 6 months or annual, because if you've looked at your gross margin monthly and you've looked at these quarterly and you keep on top of these, then looking at your net profit, the thing you're not looking at is the likes of overhead, like people costs. Pretty hard to manage people cost. You can't be cutting salaries 15-20% up and down within a quarter. It might be likes of headcount. It might be if you've had to purchase any big buckets of inventory, then that could come in there. And don't forget about cash flow, because cash is what actually enables you to fund your growth. It's not all about looking at the P&L with it. As an example, I would suggest that you look at your ranking review, which is where you literally rank all your items. Look at which deliver volume. So don't just look at volume or value, look at both. So volume can have an impact from an operational perspective. You want to have some products that are selling a lot of volume so you get good efficiencies. Also those that deliver profit. So you might have a product that's really profitable, but you don't sell a lot of. So work out, can I sell more of it? What role is it playing? Your top seller may not be your most profitable, and that's okay. You can't back percent margin, and volume won't save poor margin. So just trying to operate on really skinny margins. If you're enormous, you can probably get away with it. But even then, you need to have a decent margin to run your business on. And the question of what is a decent margin? More is always better. It's probably never going to be 100%. Well, it's not going to be 100%. The highest I think I've had is probably about 75. 20% gross margin is just, it doesn't leave you, 20% gross margin doesn't leave you much to spend on brand building. It doesn't leave you much to spend on sales, general and admin, and it certainly doesn't leave you much for cash flow, future investment, or paying yourself, which is essentially what a business is about. Think about what you sell, where you sell it. So who are the main retailers or channels or customers, where you make your money. I've done a review for clients before, and we had SKUs in their list that they made, their profit in a year was half a week's shopping. So like $150. And the answer to that is, you shouldn't have a SKU that you make only $150 in a whole year. That's not, it's not worth your time, and it's not worth the resource. And that's where we look at how time and resource intensive customers are. Don't forget cash flow. Revenue can feel like profit, but you need to account for the big lumps of spend. Buying stock, you will have to buy stock and raw materials before you sell them. No matter what you do, you've got to buy it up front, pay for it up front. You have to buy your media and pay for your production up front. You know, I've got to pay for the packaging design on this before I sell a single unit. I've got to pay for all the physical parts of it before I do it. Hiring new staff before they become effective or assets. So all cash flow is what can really kill your business. And this is where working with a really good accountant to look at managing your cash flow is key. And this is why often people need investment to support their growth. Quickly, just looking at Shopify or e-commerce, some things you can look at: purchase frequency, your most popular products, your basket mix, so what do people buy together, the price sensitivity, repeat rates, and you can use all of this to craft your retailer story. So your SKU ranking, that says to them, hey, we know that the top 3 best-selling flavors are mojito and raspberry yuzu and passion fruit margarita, and they are 1, 2, and 3, and they account for 80% of sales. So when you're going to pitch to retailers, it's like, cool, the retailer's got reduced risk and you know what's going on. Your sales growth can show that there's momentum. We've had 50% growth month on month. We've had 300% growth over last year. You can use all of this as part of your pitch. You can also talk about your repeat rates. 70% of people come back and buy it within the first 4 weeks, or 70% of people are just repeat buying and have bought it 3 times or more. All of that is all reports on Shopify. And what that does is it gives the retailer reassurance that people want to come back. And if you're only selling online, then you should be looking at it, because if your repeat rates are terrible, you need to dig in, because there's a reason people aren't, and understand why people aren't coming back. They didn't use your product, they didn't like your product, they bought it and forgot about it, they found an alternative, something went wrong, it sat in the back of a cupboard, they need you to nudge them to remember to buy it again. Really look and understand your Shopify and understand the likes of your price sensitivity. So this will help inform your retail promotional strategy. If you know that you actually get a really good bump just from doing a 10% discount, don't go and try and think you have to offer a 30% discount. Know that you have confidence that you've got a good loyal group of customers, and that actually they just need a bit of a nudge or a bit of a little bit of a reward. I'm not big on doing deep price promotions because the volume uplift has to be so big just to make it back. I'm not going to go through these, but these are just some links to a couple of useful Shopify reports. Definitely go back and look in the back end, look in the analytics, look in the sales ones. The 2 clusters I would look at is the sales reports and the behavior reports, because the behavior tells you what customers do. This is just some links through that you've got here. This helps you understand sales by variant SKU. Shopify will also give you ABC classification, so you know which products make up the top 80%, then the next 15%, then the bottom 5%. So then you're like, cool, I know which ones I should be focusing on or which ones I might need to delete, because actually nobody's interested in them. And then look at sales by discount. So what this does is helps you understand your promotional effectiveness and look at your profit, not just your sales value. So if you've dropped your cost of goods into Shopify, then you can look at your margin as well. So if you have discount codes that you've used, you know, are people using the discount codes? I know I've got a discount code that I've had out there. I thought I'd promoted it. I've only had 1 sale using it. And I'm like, oh, okay, I actually should probably either turn it off or push it more if I want people to use it. So any questions? That was a whistle stop. Felt like lots on your internal data. No? Okay. Silence. Just next, so there's a lot probably my summary from this is there's a lot you can use from your internal data. Sorry, Deb, was that a question? No? Okay. Ask away. There's a lot you can use from your internal data for using your sales pitches, for really understanding your performance, for doing a review on your products. Absolutely use all the data you have. It's free in the sense that it's yours. You should use it to maximum effect. This is where we start to get into the paid side of things. So retailer data and research is the shopper and sales data. So it's quantitative. can be based on the retailer data or collected by external companies. So there's a lot available. I'm not going to go into all of these because there are a lot here, but what this does is show you the different kinds, show you who they come from, because you may hear these phrases. You might hear Circana, which used to be IRI, which was Aztec back in the day. Something else before that. What these are is every time you go to a supermarket and you beep, scan a product, all of that is recorded into a database, and the retailers sell that data and suppliers buy it. And you can buy that as a one-off report. You don't get any insight to the shopper, you just get transactions. So the likes of sales, pricing, promotion, distribution, even a quarterly, even an annual MAT and moving annual total, so just an annual dip can give you a good overview. That should give you the retailer, the banners, the market, the segments, the brands, and the individual SKUs underneath it. So if you're going to buy it as a snapshot, get really clear on what it is you're actually getting. Shopper panel is home scan. So this is when you can get more analysis on penetration. So some brands will buy that. I wouldn't recommend it for small brands. You can look at the likes of shopper intelligence. This is the full shopper journey. What are they thinking before? What considerations? It's really in depth. It's great if you're a big retailer. If you're a small one, don't worry about it. Retailer data. This is from dunnhumby, is the name of the company that does the foodstuffs data, and Quantium, same, but different for Woolworths. dunnhumby, you can get snapshot reports, so that just gives you a one-off. They're useful in the presentation. I've got a bit more, but they are useful at looking at things like, are your shoppers more or less price sensitive? A little bit on the demographics of it, a little bit on the average units per purchase. So what that means is, are people buying one? Are they buying two? How often are they buying it? And Quantium, similar, very preset reports and expensive. And if you're looking at it, they're not customizable. I'm not going to go through this. This is just giving you a little bit more detail on what they are. So if you want to look at them, I do think dunnhumby is more useful in the sense that you get a bigger variety of customers. So from New Worlds and Pak'nSaves. There's a lot, the richness of the information is really helpful, and it can also help your marketing as well as just, it's not just a price or a sales transaction as well. Know that Foodstuffs are using this and they have a lot more data that you can't buy. So they really, really are now understanding their shopper behavior to a level that's I've never seen before. If you're getting data, you're looking at four things: the market, the product, the period, and the measure. Make sure you understand these. I can certainly answer any questions on what they are, but really understand when it says we're buying the product information, are you getting just the total information? Am I getting the segments underneath it? So I don't just want to understand alternate milks. I want to understand how many are goat milk, soy milk, almond milk, something else kind of milk. Like, that's what I'm looking at. I want to understand a time period, and I'll explain a little bit on time. And then measure is the metric. So is it volume? And volume, is it one? Is it mils? Is it kilos? Is it liters? Like, really understand the volume. Units, distribution price, rate of sale, which is how fast per store per time period. So often we talk about units per store per week. So how many units of these am I selling in each store in a week? This number is often less than one. Don't be surprised. It's very often less than one. And that's not an unusual thing, is to have less than one. So I've seen people assume, they're like, I think if there's 1,000 shoppers that go into the store, I'm going to sell 50 units per store per week. Unless you're Coke or a really big brand, you're probably not going to sell 50 units per store per week. 5 would be pretty good. 1, if you're a new brand with one facing, might be more realistic. And then you have all the different share metrics. There's a lot in there. As an example, this is one that I've picked from the US, so don't worry, it's not sharing any information, it's on the internet. But this is where you're looking at so this is a SKU description. They're written the way that they get it. They're not written in nice ways, you have to understand. So this is probably Eat Smarter, something ranch salad bag, 10 ounce. It's probably the product code. This is the category that it's in. This is the subcategory it's in. You want to understand dollar sales, dollar change versus percent change versus year ago, dollar change, because sometimes your percentages, these aren't always, so a lower percentage but a higher value, and then how big that was a year ago. And you can see, okay, let's not just look at this year, you want last year, so you can see which products were deleted. So how big were the brands that were deleted last year? They were actually quite big. So really understand this and always ask for the absolute change as well as percentages can be very misleading, particularly when brands are small, like especially. And so see this 0% change, you're like, oh, it's not growing, but the answer is it wasn't there last year. So this tells you it's a new product. So if you just got this column, you wouldn't know which was new products. If you didn't get last year, you wouldn't necessarily know how big these products were when they were deleted. From distribution, not all distribution is the same. Sam, another Sam who was on this call, requested this was a fact. Distribution is really important for smaller brands, and you need to be in the right store, and not every store is going to be the right store. 100% distribution is probably terrible. If you're Coke, it's fine. If you're most other products, it's not. Numeric distribution is the literal count of how many stores. I'm in 1, 2, 3, 4, 5 stores. Right. Weighted distribution, that is based on the size of the stores. So if this store is 5 times bigger than this store, these both count as 1, but I'd rather be in this really big store, this one really big store, than in this one small store. So your weighted distribution should be higher than your numeric distribution, because that means, so if I had this, I might have 50% weighted distribution for being in one store, but in numeric distribution, I'm only in 20% of stores. So really understand weighted versus numeric. And you don't need to be everywhere, because when you're everywhere, it can pull down some of your performance metrics. And then time. Not everybody looks at time, but time is very helpful to understand the patterns of your category and shopper. Are you highly seasonal? If you just have a 12-month data, you can't tell if you're seasonal. So this is where your own reports look at it. Look at the seasonality of your products. Are you an infrequent purchase? So don't look at something in a 4-week period. Cleaning products. Nobody comes back and buys cleaning products within 4 weeks. We might buy them twice a year if we're lucky. Impulse purchase. Are you chips? Are you chocolate? You then need to look at shorter time periods, because you will see spikes. Really important. You'll see spikes, and you need to know what those spikes are and what else was happening. And then finally, the market data. Sorry, I'm whipping through because I know you're conscious of your time. Oh, and I've got a question from someone before I go. Hang on a sec. I can't see the question here. Can anyone see the question? No? Okay, if we don't have a question. And then finally is the retailer data. So this is your, this is the big picture stuff. So this is the things where you are wanting to look at things that aren't retailer specific. It's likely a total market. Really look at who the sources are here. Where is it from? Is it a random blog or a trusted outlet? You'll be surprised at how much people share. Nicola O'Rourke has just published a report on her LinkedIn today from Mintel looking at shopper trends in the US. It's really hard to get that sort of information unless somebody else is actually going out there. So go and find it. That's where LinkedIn is great for looking at stuff like that. Find it from people that you can trust. Look at who it's from. So is it somebody who has a real bias in a place. You need, particularly if you want to make it a business decision of this, make sure you really understand the source before you go and make big decisions, because it could be somebody who has a real particular point of view, and consider some similar markets. So if you're looking at data for trying to translate it for New Zealand, sure, look at Australia, UK, USA, and know just how small we are. Just how small we are. Like, I hear, oh, it's a $100 million category in the US, and I'm like, that's cool. That means it's probably going to be about a $1.5–2 million category in New Zealand. Like, the US is 70-ish times bigger. There's about 360 million people. So yes, you can look at their numbers, but then divide it down and take it to New Zealand and say, okay, how big is that actually in New Zealand? And if the whole market was that size, I would need to get 100% of that whole market to even make it viable, or I would need to grow that market substantially here. So I've dropped in, this is just a link. There's a whole lot of places for free places you can go. This is some top line free category data that actually gets published in FMCG Business. They go through 3 or 4 categories every month. They used to have volume as well. If you go back a little bit further, not just in the last year, you'll see it has dollars and volume, which is very helpful. So you can see, for example, when it comes to functional products, they've actually looked at the size of it. Kombucha, coconut water, and then like honey and spreads. Just one thing to note, this is millions and this is thousands. So this number looks smaller than this number, but this number is 182 million in just honey and spreads. So 54 million in peanut butter, 54 million in all functional drinks, half of which is kombucha. So really look at it. This is it here. They're all in here. You just need to go through the previous issues, look at the cover page, and it'll just it'll tell you what's in there. You're welcome to look, or I can show you. But then this tells you here, this means your value, if you've got a little star, your value and your unit. They're looking at unit here, not like litres. So volume is like a litres or a kilos. Units is your eaches. Of over 2%. So coconut water, what that does is that tells you it's not just price driven, it is price and volume driven. That is driving these increases here. If you're selling kimchi, it's 870,000, the whole market. So that's that one. This is Supermarket News. This is Inside FMCG from Australia. Again, free. All of this is free. You can go and have a look at it at any point in time. And then from here, I've got a bunch of other links as well to other free places that you can go. So if you're putting together your pitch, I'm going to say the final pulling it together. If you're using this data, you should be using it for your own performance. You have to set a time to review it regularly, especially the likes of trade discounts and COGS, because they can really hit your profits fast. And particularly the way COGS, cost of goods, have been increasing over the last few years, you can have huge swings and variations, and it can really hit your profit margins unexpectedly, and then that has a huge impact on your cash flow. You need to understand what's happening in the market with key retailers. If you're wanting to go into a really big category in foodstuffs, for example, I would recommend getting a snapshot report so you can at least understand who are the key competitors, how big are they, what is it looking like in terms of volume growth and value growth, what kinds of shoppers. So you definitely should buy that snapshot, if only to make some big business decisions off it. Don't buy all of them all the time, they're really expensive, but certainly use it if you're wanting to go in at scale, and look for insights inside and outside New Zealand from trusted sources. The internet is a wash of everything, but really look at who you're looking at and are they trusted, and find some trusted people online as well that you can follow. Lots that's shared, find the right place. If you need any more, you can just drop me a line. This is me, not wearing my pink today. So that was that. I feel like I've whipped through a lot in that time. Dani, Sherelle, Debs, Sam, questions? I'm going to stop recording in a second. You're on mute. Unmute, unmute.
There we go. Can you hear me?
There we go.
Yeah. No, it's good. I mean, I'm not a numbers person, but something I have learned is how important they are.
Yeah.
Yeah. We've been
Absolutely.
working hard on our margin, and yeah, we've made a lot of progress over the last few months, actually.
Good.
Yeah.
Yeah, and it is, what have you found? I'm going to stop recording, but what have you found the hardest